Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this wrap-up is for Monday, the 24th of May, 2021. So we had an up day in the stock market, but it felt like a typical summer day. Hot, market running on news that not really there, didn't get any real economic data. A strong Monday, we're going to lead to a Tuesday reversal. I have my feelings about that. I think it's very possible. I was down at the Board of Trade today, hadn't gone there since about a month ago. Even more retail stores all through the financial district are gone. It's decimated. Where the LaSalle Street, that's where they shoot Batman. You always see that, the fabulous Art Deco building. That's the Board of Trade. I'm telling you, the retail stores, one after the other, from the Verizons on, they're all gone. So they're going to have to rebuild that whole thing. So we'll see what happens in September as they're getting ready for people to come back into the buildings. But even in the Board of Trade, none of the restaurants are open, the main restaurants. Some of the smaller ones are. We'll see what goes on there. All right, let's go right to the data, the charts, and see what we've got. ARC, we've been expecting a rally, at least I have, and we've talked about it over and over here. You had a pattern of higher lows develop and higher highs, and in fact, when you got up on this day right here, that took out a previous high right through there. And that ended that wave of the downtrend. That's what I was explaining. Most times when that occurs, what markets try to do is get back to their 18-day moving average of closes to figure out what next. In the process, we've got higher lows, higher highs, so that part's bullish. Here's the 18-day average of closes in red. That's all that you've really done. This is where the game starts. Is it going to have legs to it, or is it going to start failing from this point? Remember that I said that, because I'll live by that. The Bollinger Bands are going to come crashing in at the top side, and the bottom's going to gently rally to it as the market probably gets stuck in this area. I'm giving you an anticipation, but I've seen these patterns a lot, and that's one of the things I'm looking for. Momentum is pointing up. So you have momentum up, not overbought. That's important. You've gotten back to the neutral zone. The market is going basically sideways to higher, and you're going to see when you reopen, this upper Bollinger Band's going to come crashing down even more. You have a lot of resistance starting right here, the next level, the 200-day average at 114.36, and then up at 120.64. You've got to get through tomorrow, though. Can you stay over that 18-day average of closes on the first attack? GameStop, I have been saying you're caught in this sideways action. Has it changed? No. Now you're up to the upper Bollinger Band and overbought. What do I expect? A failure. I mean, sooner or later you're going to break out to the bull or bear side of this. Right now things favor the bull side. But to buy a Bollinger Band, if you were my enemy, I'd have you buy it. How's that? And the reason is 95% of the time you fail against that number. I get asked all the time, what are my favorite tools to use together? Is there something, if I had to throw everything else, I'd use? And it would be slow stochastics and the Bollinger Band that I'd tie together into my enhanced Bollinger Band course. If I threw everything else out and traded those techniques, I believe I'd have a pretty good shot in the market. It's that simple. All right, but you have the other techniques, so that gives you another edge. Does that mean you win? That's not what I'm saying. Trading is just that. You're putting the probabilities, knowing what you think has worked in the past, the formations, what's going on, to give you a shot in the marketplace. There are no guarantees. You will get losers, you will get winners. If you follow money discipline, you can stay long enough. What the market waits for you to do is to break your own rules. You think I don't do it? You'd be very wrong on that. It waits for you, and then it haunts you because you did that. You got to break them every now and then to get them back into your head. When I look at Apple, same thing. You came off this break low. You held the 200-day average in the Bollinger Band. I said that that was a possibility. If you rallied, I also said maybe you get back to the 18-day average of closes, but you got a lot of resistance between that and 128.96. I think the market's in its resistance zone. I think the easy bounce is over. Now can it do something else? That's going to be the big question. In the semiconductors, I heard our Commerce Secretary And she thinks that she's going to possibly get out of Congress $56 billion, of which states will add monies, and then private equity will contribute monies to get in maybe 7 to 10 semiconductor plants built over the next 3 to 5 years. That's pretty impressive. We'll see if she can get that done. First, you got to get that $56 billion. Then the states have to vie for that, and then they go out to the private companies, and what do they offer for each of the companies to come in there and spend the money on those plants? If you'll recall, when you go through some of these plants, you realize that each one of these plants that print these semiconductor wafers, some of those machines are 5 million a piece, and you'll see rows of them. So we are dealing in big time dollars. You are not dealing, oh, I'm going to come in and I'll spend $100 million. Well, that's 20 machines. What about the factory? What about the other machines you need? It's a lot of money. That's why you're talking this kind of money. But the idea here is we have to get America, I guess, away from counting on our chips being made in other countries. I think that makes a heck of a lot of sense. So you're up, you're overbought, you're not in a trend. That's the important thing. PODX. I'm still looking for the possibility of getting to that 18-day average, but just like Apple and some of these others, I'm looking for pretty stiff resistance against this. While the trend is up, the bias is down. The market's sort of in no man's land. ESGU, the trend is back to the upside. You have higher lows, higher highs. So traders are probably, at this point, saying, okay, if they can get in against that 18-day average, I'll show you, you got up to it right over here. You had to clear 95.35, you did it. So now that you've done that, if you can get back to that 18-day average, do they buy it? And if they do, as I see it, their stop would have to be under 92.57. They're not looking for much. I think the market's going to have great problems at the upper Bollinger Band at 96.91, and I think to get there, you're going to hit overbought territory. In the energy cycle, you've gone flat. The market broke back down to the 18-day average of closes. Very typical. That's the battle zone. So you're getting, so far the market's been able to stay over on closing basis, so you've got the bias up. You don't have a trend. You have a lower low. Well, actually, you got right through here, you got lower lows, lower highs through this. From there down to here and then back up. There's not a pattern. EFA, you've got a lower low, a higher high pattern. That's not a trend. You're overbought. You fought a little bit here. I don't think you're going very far over that upper Bollinger Band. In other words, I think we're range bound. I'm not excited about what I'm seeing on the charts right here. In the gold market, I think the pros are still looking to buy on a pullback in this market until that red line closes under 79. I think the pros are going to be aggressive buyers as long as you don't first take out the prior day's high. I teach that again in the charting course. In the gold miners, same thing. I think the pros are buying. They'll be out if you, I think they'll be out if you get under 79 on a closing basis, and barring that, I still think they're looking for the 40.82 level. TLT, we were talking, could you get up to the 18-day average? Why did I pick that number? I want you to look. You have an outside day down, and this was on Wednesday of last week. If you take out the high of an outside day down, the odds favor the market will make a run to the closest main moving average. In this case, it's the 18-day average, all right? You tell me what went on today. Bingo. That's what you look for. These are the patterns that you look to get advantages on and see what's going on. The problem is I'm not really seeing anything big to do in these markets. In FXE, you've got higher lows, higher highs. Now, are we embedding? Both numbers today were over 80. They were over 80 on Friday and over 80 on Thursday. So the answer is, I think tomorrow the pros will start buying. I will talk about it in the subscriber video as to the numbers that I think they'll use to do it. And it all comes from this course that you're seeing. You know, again, if you were to sit me in a room and we talk about it, I would be saying, okay, I think that if all I could trade were one technique, this would be the technique that I'd go with. I teach it in all that I know about it in 13 video chapters, each about 7 to 8 minutes long. If you understand what a Bollinger Band is and a momentum index, you'll understand the course. If you have no idea, learn what a Bollinger Band is first, because this will be over your head. If not, you're going to get it. And I try to bring you things that I think have edges to them. It's that simple. Nobody can tell you this is going to work, that is going to work, it's going to do this all the time. If they do, they're a fool. First of all, why are they telling you that? Just go do it themselves. Nothing works all the time except death and taxes. I've said that here before. I'll say it again. But I look for the percentages, money management, knowing where you're wrong, where something's not working, and trying to catch those trades with a high probability. It's that simple. To me, that's what investing in trading is about. If you think when you're rotating in a stock portfolio from this sector to that, what are they doing? They're thinking, well, that went far enough. This still has a part to go. Remember, stock traders are always long. You do know I'm saying that. So they're trying to beat what the market averages do. That's the benchmark they have to go against. If it loses 10%, well, maybe they'll only lose 5%, and they did a good job. In the futures market, it's different. We got to show a net result, otherwise people lose their money, and there's nothing to compare it against. Well, we didn't do as bad as we could have gone. Okay. How to find out more? Just go to my website. You can play with it there. Under the word education, that's where it belongs. It's simple, inexpensive, and I think you'll learn something. I'm Ira Epstein. You have a great day, and I'll see you tomorrow. And one last thing. I think I'm going to do this Thursday instead of Wednesday, that What's Up. There'll be more about it in an email, and I'll explain it all tomorrow. Take care.